So I'm going to be showing you my trades on January 18th, 19th, and 20th in this video today. It's a bit longer, but I go into detail about my entries, my exits, and why I'm taking the position so you can learn from how I approach the markets. So I'm using the Powerhouse EA, which is a really cool software of my own design, and it allows the trader to go on complete autopilot and basically make 5 to 10% a month. Which is really awesome, but it also allows a lot of flexibility when trading manually as well. So the beta version that I'm releasing later on this month has a trade panel. So this will allow you to basically hit buy and sell and start a trade sequence, start a trade sequence, and the algorithm will take over and manage that position into profit, which is really awesome. So I've been doing that for the last month, since December 9th, and you can see my results. So I basically hit buy and sell and allow the algorithm to manage that position. So I can step away from my computer, sleep at night, and it will bring me into profit. So I've had 1.64% drawdown since December 9th, which is really quite low for over 17% gain. This is a live account. It's small right now. I'm planning on adding more to this account, around 30,000, but I'm waiting for me to finish my concert touring that is my side project later on in March. So I'm gonna probably wait another couple of months and continue to show you guys my trades on this account and basically prep for the larger funds that will be coming in later on. All right, so this week 0.7% profit or today, and then this week 2.5%. So really good percentage gains on this account working with the Powerhouse. So let's show you the detailed trade setups that I found this week on January 18th, 19th, and 20th. All right, so January 19th, 2023, I've had 3 trades for today that have closed out. Talk about those in just a second. My current setup that is based on rejecting off of the resistance here, and I'll talk more about that in just a second as well. Okay, so the 18th, really good day. This was yesterday. Came out with over a % profit. The account looks like this. So you can see that I'm 1.83% profit for this week. A really low drawdown. So my last video showed that I was 0.7, I think 7.76% drawdown. I reinstated the account because the drawdown wasn't reading correctly. And so this is a lot closer. It's actually 0.5%, so it's showing just 0.004% under what it actually is, but it's definitely more accurate. My FX book is not quite perfect when showing the drawdown for some reason, but it's pretty close. So today I'm down 0.08%, but yesterday's trades were really quite good, and I had that big basket of trades that closed out for good profit. You can see that closure right here was about 0.5%. So the nice thing about this sharpshooter is that when it has a trade sequence of like 3 to 5 trades, this one was actually 6 trades. Once it has a sequence of 5 or more, it starts to pull back on its taken profit. But if it has around 5 trades, which was really close in here, it will maximize its profit. And so that's why I was able to come out with a 0.5% in this case. I actually had a little bit of slippage as well. So it was really nice to have a good trading day because of that. So I had to take 2 more trades up here. So those were short positions. And I'm going to show you on the different chart. Whenever I change time frames, it causes my trades closures to disappear. I don't really know why that's the case. So you can see here, push up, and didn't have a rejection candle up at the top, but it gave me a rejection or continuation candle right here. So what I'm looking at with this candle and why it's important to me is because it has the wick, and then it has the nice bearish body and a strong closure. That is a good indication that buyers are failing, and we have an aggressive change of direction, and that's why I took my entry after the closure of that candle. Looked for about 10 pips profit. Same thing here, where there was potential for this continue back up, and we saw that with some of these candles that happened after, even this one right here. Looks like it was a bullish engulfing candle, canceling out the previous. It looks like it was going to bounce back up. Then we had a wick candle and a full body rejection with a good closure below all the previous candle lows, or where the body of the other previous candles are. So this candle is showing me that there's a good possibility for continuation further down. So that's why I took those 2 trades. Okay, so they worked out really well. And now I'm looking at my trades for the 19th. So this was my first entry, and this was in the Japanese session, or late US, it was a late US session. Took this at the round number, so this is 1.08, 1.08. And the round numbers have natural support and resistance. That's why I'm looking for trades around them. You'll see price a lot of times bounce around or find support or resistance around it. And what happened here is it just died. Price died, and it got into a tight squeeze right here. And when I see this happening late US session and going into the Japanese session, it's a little bit dangerous because volatility can all of a sudden pick up, and it can shoot down really quickly or shoot up really quickly. I didn't want to get caught in that. And so once it starts doing that direction or pushes or breaks out of that tight squeeze, it can push pretty heavily. And so again, I didn't want to get caught in that. So I closed out my positions here for a small loss. It was only about 0.25%, so not a quarter percent, not too bad. Then I saw this candle right here. And I'm going to talk about this bullish engulfing. This is not a strong bullish engulfing on the M15, but it was enough for me to take. So the low right here is lower than the previous candle, and there's a bearish candle just before that as well. So I'm looking at price going down a little bit lower than all these previous, this level right here. So it dipped down a little bit, and then we got this bullish candle right here. So a new low that it made, and also closed strong and closed above the previous high. And it's a bullish engulfing candle. So it's engulfing the previous candle. So this is a nice 2-candle setup, and took the entry on the next candle. So this was a manual trading entry with the buy button, and you can see that it worked out really well. So about 10 pips profit. Okay, so now I'm looking at my new entry, which is right here. So I took this position based on the M15. So you guys have always thought that I take trades on the M5. But I actually take trades on multiple time frames. So in my trading that you'll see with these setups that I'm showing you on this account, I could take them on the M30, 1 hour, M5, M1, M15. It just depends on what I'm seeing on the chart. And in this case, I saw something on the M15. So let me give you an example of what things are looking like on the M5. They're not looking very amazing. And you can see that there's no rejections. There's nothing telling me, there's no rejection candles in here or anything that's really telling me that price is going to move down, at least on the M5. So if you go to the M15, it's a little bit different. So you have my retrack indicator showing me. So this is the retrack. If I click this, we'll load the retrack on chart. And typically I like price, and I was looking for price to break this level. So these are the important levels that I'm looking for price to kind of break out of before taking any position. But because I received a specific candle on the M15, this is the one I'm looking at right here. So this candle is of pretty big importance to me. So we have a push up. The retract, this showed me that price moved 30 pips, which is pretty good. But again, preferably I wanted to move higher. So this could still move higher, but I think I'll be okay here. But this candle is telling me that, okay, well, we've moved up enough here. We might be finding some support at this level, and we could continue down. That was a gamble or trade setup that I was willing to take here. We're going to see how this works out. All right, so far it looks like it's just hanging out, and we'll see how this plays out. It's January 20th, and my trades from the 19th finally closed out, so you can see them here. It ended up being a 5-trade sequence, and they closed out during the Japanese session on the 20th. So this was my first trade take right here. The idea was I didn't want to take any sell trades below this point and any buy trades above this point. I was waiting for it to break out of the range. I got a little impatient yesterday. The price wasn't really moving very much. And I liked this candle in the M15. It was a nice rejection candle showing me that there was potential for the downside, even though it was still within that range, which I didn't really like. Ended up being not the best take. I was impatient with this, and it did end up breaking and retesting this point. And there were much better entries later on, which I'll show you right now. So the entry that was much better, this was my original taken position right here on the M5. But since the trade was taken on the M15, then that's why it's not showing like good rejections on the M5. But this was a nice rejection, and it showed with my E and G candle setup, nice new high, and bearish engulfing pattern that engulfed the previous candle and closed below. And it didn't really move either, but price did move up a little bit further, and this would have been the much better take of the trade would have been on this rejection instead of where I entered. So again, a bit impatient with that. And it didn't still break out of this range, but this rejection candle would have got me in for sure. And I would have been out of the position because it would have gridded another one or two trades, and I would have closed out the position here or even here much earlier. So this trade being much lower where it was caused me to have a 5-trade sequence when most likely if I would have waited a little bit later, I would have had just a 2 or maybe 3-trade sequence, resulting in less drawdown. Still, not much drawdown on the account, 1.64%, and still 17%, over 17% profit. So for today, 0.38%, and this week, 2.21% profit total. All right, so my next trades were a short position here, closed out for a small profit, and another short trade here that went down, but I didn't close it out. It didn't hit my target, unfortunately, my auto target for the sharpshooter, and then bounced back up and gave a golfing, bullish engulfing pattern with my ENG candles. And this was a really clean trade, or a trade setup that I wanted to take with the trend. So I entered on the next candle, and this was a long position resulting in 10 pips profit. So that was during the European session, which I happened to be up for. I was playing Call of Duty with friends over the internet. So sometimes when I stay up late, I'll take some trades while I play a few games. All right, so next trade setup was pushing down. So this was a decent setup here for a long entry at this point. You can see the retract indicator gave me a signal here. So we pushed down 30 pips without a pullback, and then price moved up a little bit and gave a pretty decent bullish engulfing candle, but it was pretty late within this group of candles, so it's not the cleanest of setups. I might have still taken it for entry long, but I wasn't awake for it. So I saw this setup here. This was a good continuation candle on the downside. So this was a counter trend trade, and I liked the setup. It was a really quick candle. It picked up volatility, gave a little wick on the top, and a nice body on the candle, closing below this daily pivot level, and all these indecision candles as well. So that's why I entered right at the end of the candle. It's like 5 seconds before the candle ended, so I could get into on this move down, and it ended up being a good trade setup. So now I'm just waiting for a new pattern. So I want this to move down, give me either a retract or ENG candle formation setup for another bounce on the upside. So I'm not seeing that yet, but trades are the price is looking pretty good. It's below my bottom trend line here, and we're in the long pattern over the higher time frame. And so I'm looking for price to continue down to give me some kind of indication that we're going to have a bounce. And nothing yet. There's nothing in this pattern yet on any time frame that I'm seeing. So just being patient for the rest of the session, see if I can get a long trade setup here. So I've taken a new trade setup here. So prices move below my trend filter. And when it moves below the bottom line, typically I'm looking for buy trades, right? So here, I didn't really see any good candles except for this one right here. So that was a bullish candle. And I like this one because it shows me a little bit of wick and it shows me a full body matching the top up here. And so I'm thinking that this is going to continue up from this point. When I see price move down and starts to kind of waver and gives me some indication that there's going to be a move, it's the same thing happened here. Push down, kind of wavered around at this level, gave a nice bullish pattern right here. It didn't end up pushing up and fell down further. So this is what I'm looking for, this candle right here, as my indication for continuation, or at least a push off of that pivot line. So we're really struggling at the pivot line right now for the day, and we're going to see what happens with this trade. So my trade just closed out a couple minutes ago. You can see my entry right here and my exit for 10 pips profit. So it worked out really well there. And the reason why I like this trade so much is because price moved down and below the bottom trend line. So this is the M plus F and the trend indicator. And the wider the spacing between the top and the bottom line, the stronger the trend in that direction. And it's taking the trend off of the higher time frame. Um, and so when price moves below the bottom line, there is a lot more potential for a bounce in a continuation. So if I zoom out a bit, you'll see what that looks like. So we have price moving down below the bottom trend line there, and here, and also in here. And then we have a bounce. So a bounce there, a bounce there, a bounce there, and a bounce there. All right, so that's what I'm talking about when using the M plus F trend indicator. So let's go back to my trade setup and show you what that looks like. So the initial entry for a possible bounce was right there, and that still would have been fine. If we even took a trade right there, would have had trade 2, auto trade 2, auto trade 3 probably right here, and then all trades would have closed out for a realized profit at that point. So it still would have been a good setup even if it was taken earlier. All right, so that may complete my trading for the day. We're going to look at my profit and see what we're looking at. So 0.5% profit today. So I'd probably call that a day unless I have a really good setup in the later New York session. So I did end up taking one more trade, and you can see it right here. This is the position, and so far it's working out okay. You can see the retract indicator has given me some signals that we've moved 30 pips from here to here. So we're starting to get into extreme territory. And one reason is because we're starting to get closer to the daily R1 level, which is the heaviest resistance for that day. Um, so we'll see how this trade works out. The reason why I took it is because of this candle right here. So this is a bullish candle. It has the smaller body but the larger wick, where it pushed down basically and then whipsawed back up. And I liked the way that candle looked for a continuation on the upside for another 10 pips. So we'll see how this works out. All right, so you can see that my trade worked out. So I know the buy trade right here closed out for 10 pips profit. And you can see that the Powerhouse using the sharpshoot strategy actually shows me my daily profit for the day. So 0.7%. So really quite a good day. And my FX book shows very similar. So 0.69% profit for the day and 2.5 for the week. So I'm going to be looking for short positions now. Rejections preferably be before above here, here, or here. The higher the rejection that's above this level, the more likely I am to take it. Um, but it would have to be a pretty substantial rejection in order for me to counter this move. I still think there might be more for it to go. I want it to be closer to the daily R1 before taking any potential trades against the trend. But that might be it for me today, guys. Thanks so much for watching. Catch you next week.